one with the other. All right, so the big key here is the neutral zone. It's the yellow bars. Now, a lot of times people are looking at the highs and the lows, and they're taking those as their key points. The highs and lows are important, and yes, we're going to use those. But the key point is the neutral zone. It's the yellow zone. That's the most important point of Fibonacci. It's not the highs and lows of the market. It's the neutral zone. So we need to look at the neutral zone. We need to trade off of the neutral zone. All right. And the Fibonacci ruler gives us our projections and our retracements. It gives us our points of profit taking or our goal of where we think the market's going to go. So I'm going to show you how this worked today in today's market. We're just going to take the Fibonacci ruler and we're going to lay it over the top of the bulls and bears, because the bulls and bears is a mathematically calculated Fibonacci projection. All right, it calculates for us the Fibonacci sweet spot, the distance between 38.2 and 61.8. That's why the price bars turn yellow. All right, so if I draw the Fibonacci ruler on here, from this high peak right up in here, down across to this bottom point, you can see that the Fibonacci sweet spot is right here, okay? Fibonacci sweet spot, 61.8 to 38.2. But you'll notice that on this downtrend from here to here, from this high to this low, the yellow zone did not go through the Fibonacci sweet spot. They didn't match up. So you're like, well, I don't understand. Why didn't it work? Well, it did work. What we're doing is we're using the projections off of the sweet spot, not off of the highs and lows. Now remember, we're not looking at the highs and lows here. We're going to come in, and again, from this low right here, we're going to draw our Fibonacci ruler up. We have no idea where it's going to go. All we know is we have a neutral zone. We're going to line up with the Fibonacci neutral zone on the ruler. So we have the mathematically calculated bulls and bears neutral zone. We're going to line that up with the Fibonacci neutral zone of 38.2, 50, and 61.8. This one turned green, which was what we would anticipate for a little A, B, C pattern. We'll just sneak in here another tool real quick. A, B, C, and we're going to anticipate this market's going to rise in price. And we're going to go ahead and we're going to do this one more time. Now, here's another yellow. We don't have to sit and look for highs and lows. We don't have to look for breakout points. All we have to do is we have to look for the Fibonacci neutral zone. We then take our Fibonacci ruler. We drag it over the top of the bars. We're going to go from this low point. We're going to go all the way up until our bars cross over. Right up in here, you can see we got the yellow bars going through the Fibonacci neutral zone. Now, this one, the market broke out the top and didn't quite hit. Didn't go all the way up, did it? Didn't go all the way up and quite hit our B projection point. Pretty darn close, but not quite there. So the bottom of the yellow bars, the top of the yellow bars right there, you can see that I put this right where the yellow bars broke right there. And I've got the top right here where the yellow bars at the high. So now we've straddled the yellow bars in here. The market's been going red. We're going to anticipate a continuation of the red trend, and we're going to look for it to come down to our Fibonacci projection or our target price, which is going to be the B point right in here. And again, we're going to put it just a tiny bit inside of that. And there we go. If we come in with our dollar calculator, once again, we're going to see that when it broke out the bottom of this thing and it hit our target, that's a $25 move. All right. Again, $25 in the micro mini, $250 in the regular size account. It's worked every single time so far. Does that mean it's going to work every single time for you in the future? No, of course not. Nothing works every single time, but we're using high probability trading patterns, and it's easy for you to find and identify. The biggest problem traders have is knowing when to get into a market, when to get out of a market. This is a cold, hard, solid strategy. All right. We just play the yellow bars.